Welcome back to the channel, guys. My name is Gordon. Today we're jumping in to show you how you can be earning 50% plus on stablecoins across some of the opportunities in DeFi right now. As always, if you enjoy the content, please make sure to smash that thumbs up button below, hit subscribe, hit that bell notification icon, and make sure to grab your free copy of The Rise of Bitcoin in the description of this video. Grab that below and let's talk about the stablecoin yield. Okay, so during times like this, when the market is pulling back, it can be painful. And that does not mean, however, there is not opportunity to be earning yield from providing liquidity into certain protocols and or putting your stable coins to work in a low risk effective manner. And I want to share a few different opportunities in this video as to how you can be earning yield on your stable coins, some of which are very, very lucrative. Now, I do have to state that even though stablecoins are extremely low risk, you do have to understand the other risks involved. It is not completely risk free. If you're putting your capital into specific protocols, it is taking on a certain level of protocol risk. It is taking on the potential for that protocol to have an issue. And so you have to be aware of that. And as always, I would recommend using a hardware device for deploying that capital, using, ultimately that extra layer of protection when wanting to deploy capital so that you are protected from anything happening in your software wallet. Okay, so let's talk about these different opportunities because over the past year or so, we've seen the rise of perpetual dexes in the crypto space. The likes of Hyperliquid have been very, very popular, garnering huge amounts of adoption and ultimately gaining popularity among investors because of their extremely profitable revenue model. Okay. However, some of that profitability is ultimately passed on to investors who are acting as the counterparty on those perp dexes. What do I mean by that? Well, when people are trading on Hyperliquid or Aster or Avantis or EdgeX, you have counterparty liquidity pools where those perp traders are essentially dipping into to borrow funds in order to go long and short with leverage on specific assets. And ultimately, in gambling, the house always wins. And so by you providing liquidity into these liquidity pools and acting as the counterparty for all of those perpetual traders who are taking on leverage, you have the ability to earn yield on your stable coins and on your money. Okay, that's the opportunity I want to present in today's video. So let's look at a couple of examples. I want to talk about Avantis first. Avantis is one of the fastest growing perp dexes on the base network. If I jump over to Avantis.com here, you can see you have the ability to trade different assets in terms of crypto, but also different assets like different tokenized stocks. You also have Forex pairs like the US dollar and the Japanese yen. And Avantis are making it very easy and seamless for traders to trade those different asset pairs using leverage. But like I said, if we come into the Earn tab, right now you're earning just under 20% APY on your stablecoins from deploying your capital into the Avantis LP vault, where you're going to be acting as the counterparty by staking USDC and receiving a share of the trading fees from the people who are trading using perpetuals and levering up their positions. Okay, 20% is phenomenal. You're not having to do anything. You're not having to define concentrated ranges. Yes, you're taking on a little bit of protocol risk with Avantis, but your capital is going to be deployed in the form of USDC, and you're going to be getting just under 20% for doing it. Okay, they do also have the Avantis security module. However, for this option, you do have to stake the Avantis token itself. Of course, the Avantis token is a volatile asset. It's going to fluctuate and change in price. And so even though you can get slightly better APY, taking on the volatile exposure to the Avantis token may not be something you ultimately want to do. Getting just under 20% on your stables for acting as the counterparty here on Avantis is still a phenomenal deal. And that is the first opportunity I wanted to share with you guys today. Okay. Next up, I want to talk about Aster. Aster is one of the perp dexes that gained a huge amount of traction here in the past few months as potentially this legitimate competitor to Hyperliquid. They gained a huge amount of traction because ultimately they are being backed by Binance and CZ. So again, when you think about the grasp that Binance has on the entire crypto landscape, they have been the largest centralized crypto exchange over the past number of years. And ultimately, in my opinion, what I think you're seeing now is a trend change where retail traders and investors want to be taking more self custody over their assets, where historically the likes of Binance and other centralized exchanges have been extremely popular for futures trading and the ability to allow traders to use leverage on those centralized exchanges. Hyperliquid changed the game and they gained huge foothold in the market, taking customers away from centralized exchanges just like Binance. And in my opinion, I think that's why CZ and Binance are backing Aster, because they know that is the trend that's happening. They know retail investors want to be self-custodying their assets, and Aster is a decentralized perp DEX that allows traders to execute longs and shorts using leverage. They want to get in on that trend. Okay. So over on Aster here, you can deploy into the ALP, the Aster Liquidity Provider Vault or strategy here, and you can be earning about 17%. Okay. Again, you have to understand that you're taking on exposure to the Aster token here in this particular strategy or vault. You're getting 17% on that. You are having to take on volatile exposure to the asset under question. I think Aster has long-term potential. I think it could go much higher in terms of price. But that 17% APY could easily be wiped out by the volatility of the underlying asset that is Aster and the way that it's trading. If I come over to spot here and we check out the actual price of Aster at this moment, we're at $1.17. So it's actually holding up pretty well despite the market pullback here in the past couple of weeks. We did get back up to $1.40, but holding nicely above this $1.10 area of support. This is another opportunity to generate yield. But again, I want you to be able to get yield on your stablecoins and not have to take on huge amounts of volatile exposure. Okay, for that reason, the next opportunity I want to share is Lighter. Okay, Lighter is another perp DEX gaining a lot of traction recently because of their growth and the underlying layer 1 protocol that they're building to underpin the Lighter perps DEX. Again, you can see the list here. This is sorted by 24-hour volume across these perp DEXs. And technically speaking, Lighter is the second largest perp DEX by 24-hour volume most recently. Okay, you can see that it's climbed up the ranks here. It's doing 10 times more volume than the likes of Aster and some of these smaller DEXs. And so $306 billion in 30-day perp DEX volume means that there's a large amount of fees to be had for those people acting as the counterparty with the Lighter liquidity provider pool. If I jump over to Lighter and come into the public pools area, you can see the Lighter liquidity provider pool is paying 39% APR on stablecoins. There's almost $500 million of total value locked in that specific Lighter liquidity provider pool, and you can be generating just under 40% yield on your stablecoins. Now, I do have to give a caveat here because you do have to accrue at least 50 points on the Lighter perp DEX in order to be eligible to deploy capital into this Lighter liquidity provider vault. In my opinion, that is a barrier to entry that should be removed. Again, you have to accumulate points by executing some trading volume on Lighter, or you need to have been part of their initial airdrop, I believe, in order to get those points. So there is a small barrier to entry here. You have to accrue those 50 points on the protocol to be eligible to deploy capital into this vault. But if you think that 39 to 40% yield is worth it, then you might want to go ahead and do some trades over on Lighter. You could take a delta hedge position by longing assets on Lighter, shorting them on a different perp DEX, just to build up the points and the volume on Lighter so you can deploy into this liquidity pool, because getting 39% on your stablecoins is phenomenal. And you can be doing that by deploying capital and acting as the counterparty here on Lighter.XYZ. Okay, last but definitely not least, I want to share this opportunity over on EdgeX. If I jump back to DeFi Llama, EdgeX is technically the fourth largest perp DEX by 24-hour volume here and accruing $180 billion of 30-day perp volume. So jumping over to EdgeX, this is possibly the most lucrative opportunity right now in terms of being able to provide liquidity into a counterparty pool and get 82% APR based on the past 1 year returns. Okay, there is almost $200 million in this particular ELP. If I jump back over to the Earn tab, You can see here, it's the ELP or the EdgeX liquidity provider vault. You can deposit capital in here. I'm running a test at the moment. I've just deployed just under $100 to test out if this yield is actually generating 82% APR. I am going to leave that running for another couple of weeks. You can see though, actually, before I jump to that page, this is only 215 days old, but based on those 215 days of activity, it's getting 82% APR. Jumping in here, you can see I can monitor Vault performance as well as my performance. So cumulative return is 62% over the all-time P&L. And my performance, I've generated 7 cents here in the past couple of days since deploying my test capital. I just want to test this out and see if these returns are actually legitimate. So it's working well so far, 82% on your stablecoins. And you can do that using the base network or Arbitrum in order to deploy capital in here. And then under the hood, EdgeX is going to actually transfer that over into their own layer 1 protocol. So you're having all of that happening under the hood. You can use Base or Arbitrum if you've got capital in your MetaMask or a different similar wallet. It's a very seamless experience. Okay, so that is it for today's video, guys. I wanted to share those opportunities with you to be generating yield from providing liquidity and acting as the counterparty to all of those perpetual traders across these new and growing perp dexes in the crypto DeFi space. There's plenty more opportunities here. I might dive into some of these and make videos on them in the next few weeks. But the ones I've shared today are some of the most lucrative opportunities that I've seen for generating yield on stablecoins. Low risk opportunities, definitely not risk free. But if you can be getting 20, 30, 40, 80% on your stablecoins, that is a phenomenal return. That is it for today's video, guys. As always, if you enjoyed the content, please take 3 seconds right now. Let's smash that thumbs up button right under my finger. Give it a smash before you jump out the door. Make sure to subscribe. We're on the road to our first 100,000 subscribers. I really want to hit that goal next year. So make sure to subscribe, hit the bell notification icon, grab your free copy of The Rise of Bitcoin, and we'll catch you in the next one.